warm welcome to the very first full trading week of the new year, 2026. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Aguarago. It's Monday, the 5th of January. This is your Money Moves.
Right, let's tee off with your news now. The African Energy Chamber has called for institutional stability and continuity in Venezuela following recent political developments, saying stability is essential to unlock the country's energy and economic potential. In a statement released on Monday by AEC headquartered in Johannesburg, the executive chairman, MJ Ayuk, says this is the time to continue encouraging everyone to invest in Venezuela. Ayuk asked African states and leaders, as well as the Global South, to give the acting president of Venezuela and the people support as they determine their future, sovereignty, and how they want to proceed. The African Energy Chamber has a long and strong working relationship with both acting President Rodriguez and Venezuela at large. Zambia has become the very first African nation to accept China's yuan for mining taxes. The move reflects China's growing financial influence in Africa's strategic resource sectors. The Bank of Zambia is adjusting its reserve management to align with China's role as a major copper trade and debt partner. Accepting the yuan also enables Zambia to serve its Chinese debt more cost-effectively. In South Africa, Finance Minister Enoch Godongwana today tabled the 2025 Medium-Term Budget Policy Statement, MTBPS, in Cape Town. The statement outlines government's fiscal strategy, spending priorities, and economic projections for the medium term, providing insights into policy directions and budgetary plans. Let's listen to excerpts.
This heralds a new era in Triple Ps, where private investment in high voltage transmission lines is enabled. This is really progress in our movement away from merely fixing the power utility to securing power to the grid from a range of sources. This is a key and innovative part of infrastructure reforms developed with international partners to de-risk private investment without state guarantees. We're also committed to simplifying the institutional arrangements across the infrastructure ecosystem. The new Infrastructure Finance and Implementation Support Agency will be in place by March. The agency will provide project preparation support to supply the PFI pipeline. It will centralize infrastructure financing functions to systematically crowd in private capital and promote the use of alternative delivery mechanisms. Honourable members, this is how we will ensure that our goal of public sector investment in infrastructure exceeds the 1 trillion mark over the next 3 years. Madam Speaker, we estimate that tax collection will remain buoyant over the medium term. Despite the higher than expected revenue performance in 2025-26, gross revenue are projected to fall short of 2025 budget estimates by around 15.7 billion over the next 2 years. Improving tax revenue will require more sustainable economic growth and further gains in tax compliance and administration. Over the medium term, consolidated spending will increase from 2.6 trillion this year to 2.9 trillion in 28-29. Our commitment to support low-income and vulnerable households through education, health, and social protection remains. The lion's share of the consolidated non-interest spending, approximately 61% over the next 3 years, continues to fund the basket of government-provided services and benefits that reduce the cost of living of our citizens. Madam Speaker, this spending is our commitment to the redistribution.
In Morocco, the new General Instructions on Exchange Operations, IGOC 2026, came into force on January 1. The instructions streamlined foreign exchange rules, facilitate investment, boost exports, simplify service imports, and support business travel and students abroad. Startups certified by the Digital Development Agency can now make foreign investments up to 10 million dirhams annually without prior operating or audit requirements. Resident foreign investors with at least 10 years in Morocco can transfer up to 2 million dirhams of investment income abroad. Exporters can fund foreign currency accounts up to 15% of contract value, while imports and services transactions have been simplified. In Kenya, Joanne Murira, Managing Director at Nirvana Credit, shares how SBM Bank Kenya supports their business as a primary banking partner. She highlights dedicated relationship management, responsive transaction support, and practical digital banking solutions, including Bukoni app, online banking, and PesaLink, designed to help SMEs simplify operations and drive sustainable growth. Let's listen.
We've been in the market for the last 7 years. We are in Nairobi, recently in Mombasa, with, of course, plans for expansions and having regional hubs, at least in the major representative towns in Kenya. We've banked with SBM now for the last slightly over 1.5 years. We use SBM as our primary, banker. Yeah, we have a very good experience with SBM. We have a dedicated relationship manager, and as well as a dedicated transactions team that, is on hand to answer any of our queries. We feel, as Nirvana Credit, we feel that we've gotten excellent services from the team at SBM. We have the right support. We have a banker that understands our nature of business, that is friendly to our nature of business, that is friendly to
IMF data shows several African countries among the world's largest borrowers, with Kenya holding outstanding obligations of 519.11 billion Kenyan shillings. Egypt remains Africa's biggest IMF debtor with 6.20 billion special drawing right outstanding, followed by Cote d'Ivoire at 3.63 billion SDR. Kenya ranks next with 2.94 billion SDR, while Ghana and Angola hold 2.85 billion and 2.53 billion SDR respectively. The figures underscore continued reliance on IMF financing by several African economies amid fiscal pressures, debt restructuring efforts, and balance of payments challenges. Finally, on news now, Ethiopia's Ministry of Finance has released its Treasury bill auction calendar for the first quarter of 2026, with total planned issuance of 288.28 billion birr across 6 bi-weekly auctions. Auctions are scheduled for January 8 and 21, February 4 and 18, and March 4 and 18. Bills will be offered in 4 maturities: 28, 91, 182, and 364 days, with individual auction sizes ranging from 44.3 billion birr to 53.3 billion birr. The issuance forms part of the government's ongoing fiscal consolidation efforts and follows a move away from central bank financing under an IMF-supported reform program. I am Melissa Enoch, and that's it for News Now this Monday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market round.
as you know, we are Pan-African. It's in our DNA. It's the DNA of householding holding of our parent group. And our investment thesis is even named after Africa, Africa capitalism. But you know, I can't talk about deals or things that are in motion. I think what I can tell you is that the way we have come today to make an announcement on the second pillar, on flares elimination, I think let's watch this space. We think we would have some announcements to make on the third pillar in the coming months, year 2026. And then for Africa, I think that I have to say, wait, you'll be one of the very first to know. But you should know that we are very active. We've met in a number of the locations in Africa as we are trying to play out and build our Africa playbook. But take that aside, we are looking, and this today is just an indication that we are looking to be impactful in energy, in Nigeria and in Africa.
Welcome back to Money Moves. Let's now go over to Grace for today's market review. Hi there again, Grace.
Thank you, Melissa. Let's take a look at how the markets open trading for the week. Starting off with the equities as usual. The Nigerian Stock Exchange opened the week higher by 1.74% to 159,215.48. The Nairobi Securities Exchange rose 0.81% to 188.87. In South Africa, the Johannesburg Stock Exchange edged down 0.02%, and in North Africa, Egypt's EGX30 fell 0.54%, while Morocco's MASI advanced 0.75%. Let's do a quick round on some of the Pan-African currencies. The rand weakened 0.18% to 16.47 against the US dollar. The Egyptian pound strengthened 0.80%, while the CFA franc softened 0.54% to 561.53. The Kenyan shilling eased 0.02% to 129.00. The Moroccan dirham weakened 0.80% to 9.18, while the naira softened 0.39% to 1,434 naira 17 kobo. Let's switch into the commodities data deck, beginning with energy prices. Brent crude climbed 0.71% to $61.18, while US WTI gained 0.82% to $57.79. Natural gas dropped sharply, sliding 4.37% to $3.46, while Arabian gasoline edged up 0.31% to $1.17 as at 12:52 GMT. Now, finally, two metals prices. Gold surged 2.16% to $4,423, while copper rallied 2.97% to $5.86. Platinum jumped 3.13%, aluminium rose 1.26% to $3,033.38, and iron ore was marginally higher at $107.17, up 0.04% as at 12:54 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up on this fine Monday. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.